You need to reshare that sound.
It's always my favorite when we don't have the sound on, because then we can just talk over it. And I do enjoy awkward moments there, Noah.
It's okay.
There's
No, just
nothing.
we'll,
That's all
we'll give
right.
them a pass.
That's all right. And I think it's going to be about a 5-4, and then the disclaimer each and every day as we have our intro video. I like this intro video, Cody, don't you?
Oh yeah, I love it. I mean, normally when you have sound, it gets you going in the morning.
Yeah, it pumps me up. There's no doubt about it. Welcome out to our halftime report presented by tackletrading.com. We are live here as we are each and every day at 12:30 Eastern, whenever the markets are open, to break down the news, the information, the charts, our insight into all of those things across markets each and every day. And by the way, if you're new to our channel, make sure you click subscribe and the bell, come back and join us. And if you're a veteran, if you're Team Tackle, pop in the chat, hashtag Team Tackle, and give us a thumbs up and whatnot, and get the analytics out there. Share the word. Get the good word of tackle trading out there. Today on deck, we're going to be talking about CPI, inflation, the Fed speak that is rampant in the market right now. There's a lot of Fed testimony happening out there. U.S.-China speculation and some chatter out there with the trade war and whatnot. There's a Senate hearing going on with Dr. Fauci about reopening the economy, and that's the theme that we're seeing over and over and over again. And of course, Tesla again. We'll get into Elon Musk reopening his factory there in Fremont, California, and what that means for business. Start with Marky. Mark, how you doing today?
I am actually doing fantastic. My daughter had a very easy, successful surgery yesterday with her tonsils, and she's doing great. And puts me in the best mood possible. So get ready for me to be arrogant and opinionated and in a delightful mood, because I don't know how you are when you're happy. I run my mouth intensely when I'm happy.
So how was it going into the hospital there for surgery? Obviously, I mean, you've got increased protocols.
They would only let one parent in, right? So only one parent could go in, and my wife and I decided that it would be her because she is the more responsible one out of the two of us, my ex-wife, I should say. And so we, walked up to the door, and gave my daughter hugs, went in. And then me and her grandmother, we had to just sit outside in the parking lot for hours, getting text updates on what was going on. So that is, one of the downsides of social responsibility, right? The hospital doesn't want a whole bunch of people in. So yeah, so I mean that was less than ideal, but everything went well. So very, very excited about that.
It's always a little anxiety inducing whenever you have to have any kind of surgery at all, especially for a kid. So I knew that obviously that it went well, and I'm glad to hear that. That kind of procedure where you get the tonsils out, my daughter did that last year as well. No, glad to hear it. Noah, how are you doing today?
I want to say, Mark, I can empathize with you on that, because after Liam was born, only one of us could go see him at a time for an entire week. So it's like constantly waiting and just hoping everything's going fine. So I understand the anxiety you must have been in yesterday.
You keep yourself busy, right? So it's, but hey, at the end of the day, everything went well, and that's all that mattered. So so once again, get ready to get roasted on any opinion any of the three of you have today, because I am not holding back, because I'm in a good mood.
You're coming in hot. You've done your research and you're ready. Yeah. Noah, I think you're on the opposite of that. You're in a good mood, I'm sure, but the market's dojing and you're like, this market is boring today. Is that right?
I may or may not have slept in an extra hour, because I looked at the market at the open. I was like, it's good. I'm good. Portfolio's okay. No worries here. Yeah. So yeah, then I got up, had a little coffee, and I herded cats for a while. So that was kind of fun.
Yeah. What you read on the technicals here, Noah? We're below the 200. We had the argument about the color it should be, by the way. Mark, where do you land on that? What color is your 200 period moving average?
It is blue. It will always be blue.
It's blue for Mark.
Is that because you're so sad when it crosses down below it, or is
no? It's pretty simple. The first time I ever set my moving averages, I set them a certain color, and that's the one they stayed for the next 14 years. So
I do like to mess with other people's charts. Back when I shared an office with some of my fellow traders, I would mess with their charts from time to time, just changing settings, color settings, see how long it would take them to figure out. But my favorite trick of all was going in and switching candle colors. So I would turn bullish candles red and bearish candles green, see how long it took them to figure it out.
Dude, that's just
Oh.
cruel. That's cruel. I mean, we rely on our charts, right? I mean, that's like messing with my truck or my tools. I don't like it. No, do
No,
not.
weren't you also the one that took a screenshot of Toss and set it as someone's background?
I've done that. I've set the screenshot up as their background and then removed all the icons so that they could sit and try to click on stuff. It's like, why is it frozen? And I also
Yeah.
did that with just a regular desktop. I apparently like practical jokes, and it occurs to me I got them from my mother, who was always a practical joker. So there you go.
By the way, a
But-
couple observations here. Marquise in the chat asked you, Mark, are you on the team today?
We'll get into that. Listen, I can. Let me sum it up. The bulls have the best trading arguments because they're allowed to suspend reality. They have the Fed on their back. The investors have the best bearish arguments on why you shouldn't enter today.
Mhm.
So proceed accordingly. We'll get into it a little bit later. But yes, to answer your question, I am absolutely on the team today because I'm a real American, and real Americans bet on stock market going up.
Okay. We'll break down that information, that analysis here in a minute. And by the way, I mean, I'm progressively getting on some of that team as well. There's too many momentum stocks. You know, I wrote about the tackle today on our blog today about sector rotation, what is happening. I do want to get into that in just a minute as well, because there's winners and there's losers in this market, and the charts are setting up in that way. You really are moving into a stock pickers environment where there are good companies, there are bad companies, and there will be winners and losers. Noah, just break that chart down real quick if you can.
Well, if you tuned in yesterday, nothing has changed. We've got another doji hanging out here. Just as we look at the chart, it's right between resistance and the 200 period moving average. As far as ceilings go out there, and as far as floor zones, you're above the 9, above the 20, and you're consolidating inside near resistance. This kind of sideways move can help build up for a breakout. It kind of loads tension in the market as everybody plays wait and see. So people wait and watch for the breakout. And my biggest concern right now, Tim, is if you got to break above the pivot, people would be slow to buy because the 200's right there.
Mm-hmm.
And so I wouldn't be buying this as a breakout just because of the 200. So what normally I would say is a clean pivot break, just, hey, if it takes out the ceiling, buy. You probably have to wait till it takes out that 3,000 ballpark.
Mm-hmm.
If you want a really strong bullish signal.
Yeah. And we know the relative strength in the NASDAQ, but instead of going through the indexes, I actually want to take a peek at a few sectors. Look at XLC if you can. Now, Mark, if you want to know who's on the team, communications are on the team, right?
Well, let's be fair and let's be honest. And we have learned so much about this market. And there's my cat being absolutely relentless in, let me join the team as well. There are cool kids, and think about high school. And I'm not even kidding, and I'm making a little joke, but this is the way it is. There are cool kids right now, and there are the not cool kids. And the price action is relentless in these two groups. If you are a cool kid, a pandemic stock, online, fast food, big tech, software, Home Depot, if you are a cool kid, there is a relentless momentum on your side. It is as if this market said, we have no idea. And I'm serious. This is arguments, and they make it more sophisticated when you see them on CNBC. But they essentially are saying valuation doesn't matter. We don't have any idea what's going to happen with the economy. So who are the really cool companies? Who are really great companies? And that is where money is gravitating towards. That is where, on an institutional level and absolutely on a Robinhood retail level, that is where all of the momentum is. And if you're a not cool kid, well, yeah, you're just getting left behind. You know, it's not even a bet anymore on whether the economy will reopen or whether it won't, on whether it's a V-shaped rally or whether it's not in the economy. It's, are you cool? And I'm serious. They make more sophisticated argument. Are you a cool, great company that's going to be around for 10 years? Then let's trade you, let's buy you. And there's no limit to how high these companies can go right now. Go look at CMG right now. Market darling, cool kid.
Chipotle really cool. Or is it just like voted most likely to have no fundamental strength and to get by on good looks and charm?
Listen, but once again, like, right? Like, it doesn't matter. Like, if you are a cool kid, the breakouts and that nice little breakout of that consolidation area you had on CMG 3 days ago.
I can picture
Boom.
it now. Hey, everybody, party at Chipotle's.
Now pull up team. Like, the breakouts, the technical patterns on the cool kid stocks have been vicious, relentless, and explosive to the upside. Go look at Twilio now, TWLO.
Woo.
Like, you are either cool right now or you are not. Now go pull up Wells Fargo. And you have a lot of the not cool kids. Now, the market and the market participants are not betting on everything is going to be great right now. It is momentum chasing. It is, are you cool? Are you accepted? Are you part of the future? And if the market was betting on everything being great right now, Wells Fargo wouldn't be hitting decade lows in price.
That's right.
But they're not part of the momentum play. They're not part of the cool kids. This market has zero to do with fundamentals anymore. It is, where are people parking their money? They don't have any idea how the virus will play out. They have no idea where the economy will play out. And so it's like, are you cool? Are you accepted? Fast food right now, increasingly coming in that group. Big tech, obviously, everybody knows that already. Software companies like CRM have really went up over the last week. Like, if you are part of the cool kids, and this is critical moving forward in trading. Like, why you would trade to the bullish upside anything but the cool kids, I have zero idea. The profits are intense, they're fast, 2-3 quick day hitters with huge, massive run-ups. We had a nice technical formation on CRM, nice resistance level. It broke, just ran for 3 days. We are seeing this everywhere in the market. Make a list of the cool kids stocks, trade those, and once again, don't go crazy. Wait for your technical setup, wait for your situation. But individuals that are attacking in that way are just killing it right now. Like, they're just killing it right now.
Well, and I think some of the names you brought up, obviously, they really highlight what is happening right now in this split that is happening in the market. Communication stocks are doing great. The tech, I mean, XLK real quick here, Noah, just take a peek at it. Like you're talking about, Mark, it's not just the CRMs or any of them. It's all big tech. Big tech's been incredibly strong. Even Noah asked the question on Friday, like, is tech now the defensive sector, right? Is that where people go for defense? Because I am looking at some defense like XLRE, and you would think in an environment where yield on traditional products like the bond products in the market, XLRE real quick, if you can, Noah, I would think people who are traditional investors would want dividend paying companies like the real estate trust, Mark. Why is XLRE so underperforming this market?
Now, I'm going to give you a very simple answer, and I'm not even kidding. Who are Robinhood traders trading? Do you think Robinhood traders and your average retail investors gives two craps about yield and XLRE? I mean, it's a rhetorical question, right?
No, they don't care. It is not. Well, it's even the answer we got from Jake on the podcast. You know, Mark, because you were out, I asked Jake Larmore to come join us for the podcast, and we were analyzing Walmart versus some tech name, you know, and he's like, maybe I should not think this way, guys, but Walmart just bores me to death. And that's that generation. And Jake's a good trader, good analyst. I really always enjoy his thoughts. But I think a lot of the younger generation, retail traders, they're just not interested in these kind of investment vehicles like the real estate investment trust. And by the way, I mean, they are, you know, not the thing that is going to get you excited if you're a 30-year-old kid opening your first Robinhood account, right? So I get it. I do get it. But that is obvious weakness. I would think institutions would want to buy dividend yield, though, and they're not doing it either.
Listen, I talked to a trader / investor, some younger person, and they said, I'm only up 18% this year. Is that good or not? And he was saying it like he was embarrassed that he was only up 18%. Do you think he is ever in a million years going to trade XLRE? Like, no. You know what he trades? Amazon and Chewy and Zoom. Like, that's where the action is. And I think we need to adjust. I mean, you need to have two brains. You need to have a trading brain and investing brain. And you have to separate them completely.
Mm-hmm.
Valuation does not matter. Economics don't matter. Earnings don't matter to people right now. That you need to incorporate that in your trading brain.
Mm-hmm.
They always matter in the long term over a long enough time frame, and you need to not forget about that in your investing brain. And I know it's hard to separate that, but you need to go a little bipolar, and you need to have those two distinct personalities when you're approaching your decision-making process.
Yeah. Markets are flat here today. We got a mixed market. We got winners and losers. And so we're going down into the sector level, the individual level, as we're trying to analyze companies here and try to get a feel for what's going on. That's why we do top-down analysis. S&P down, NASDAQ, Russell, they all kind of feel a little bit the same to me. Move on to crude oil if you can. Crude oil actually is up 7% here today and pressing up against that intraday resistance, also getting above that moving average for the first time. Mark, what's going on with oil right now?
You have Saudi Arabia continuing cuts. Listen, the bullish sentiment is starting to build, and it's not even bullish per se. It's just not bearish anymore. Like, you have fewer and fewer people because of the massive production cuts in the United States, because of the continued production cuts out of Saudi Arabia. You have this like calm in the oil markets where people feel, whew, the worst of it is over, right? I mean, that's increasing chatter. Nobody's expecting oil to go up to 50 right now because of the demand issue, but they're feeling increasingly comfortable with where the direction of oil is heading. And so, I mean, in those trends, we've been talking about those forever. You know, this, like, if you've been listening to me for the last 2 months, I mean, this was the inevitable mathematical conclusion in which had to happen in oil because of the storage issue. It's playing out on point. It's playing out exactly as we thought. So, you know, it wouldn't be surprising to see oil finally stabilize in some form. That doesn't mean oil is going to go skyrocket, but it makes me feel safer about different oil plays that I'm doing.
You know, what's interesting about oil, obviously there was a CPI report came out today. They strip food and energy NOAA out of the core CPI. CPI actually dropped this month, which is to be expected with the crash in oil prices in April. Obviously, core prices were coming down, also rents were coming down, things like that. But food prices, Mark, and you tell me if you're seeing this at your own grocery store, they were up 2.6% in the month of April. So you might not get inflation in areas like, you know, energy and all that kind of stuff, but we are directly seeing inflation in food right now. Mark, are you seeing that in your grocery store as well?
Yeah, I think we're all seeing a little spot check on food, right?
Yeah. Yeah.
No, I mean, it's just paying a little more, right? You know, it's the whole inflationary argument, and like, it doesn't make great halftime report, but boy, it does make great extended conversation about where inflation is going. I mean, Noah, like, I know you're an inflationary hawk. I know you're a big gold guy. I don't know where you stand on Bitcoin these days. I'm on Team Bitcoin, up 7% or so today. And I'm just going to slide that out without commentary, Tim. I don't want to hear your
so much for the happening. Wait, when's that?
Dude, they have yesterday. It happened yesterday.
It already happened. Okay.
Yep.
So yeah, I'm on Team Bitcoin at lower
Was
levels.
it Paul Tudor Jones that got you over the edge?
Yeah, I read the article, and I'm sorry, I buy a great argument. And I don't know how. I mean, give me an over under on how long interest rates stay at zero, Noah.
1 year tops.
Like, how long do you think loose monetary
Don't we go negative?
No, before they raise again.
Oh, it's 20 years. They can't raise them.
Like, how long till they stop spending money and reduce their balance sheet at the Fed? Give me an over under, Tim.
3 years.
Yeah, that's a really, really, really good inflationary argument.
Mhm.
Like, and especially couple that now. So that's just on the Fed side. Couple that with pandemic cost that companies are going to have to do across the board. That's going to jack up prices. The companies aren't going to eat those costs. Couple that with federal spending on the government level, flooding the economy with money. That's a lot of money pushing up smaller group of demands. Goodness gracious, help you if you have a supply issue at any point.
Mhm.
The inflationary argument is a strong one. How do
Sure.
you want to play that? You want to play it with gold? I do. Do I want to play it with Bitcoin? On some level, I do. I just am greedy and want it to pull back a little bit, but I wouldn't mind a Bitcoin position.
Mhm.
Do you want to play that with stocks? I mean, that's one of the stock arguments, right? I mean, make the stock argument on inflation, why people should just get into stocks as an inflationary tool.
Well, bring up the dollar if you can. I mean, just think about it, guys. If rates are going to be down at zero, you always got to think about where the money is. And money moves from defensive to aggressive posturing all the time. And you'll hear this phrase when you're reading blogs or watching the talking heads on TV. At some point in your investing, and you'll probably hear it a lot. We're risk on or we're risk off. Traditional investment vehicles, people who manage money, who are trained to manage money, who are, by the way, have a fiduciary responsibility to their shareholders to put money to work in the market. There's no yield in currency. There's no yield in savings. There's no yield in anything right now. So they're forced into risk on assets, Mark. That's why the markets are going up. It's all of this Fed action behind the Powell put and everything that's been happening the last couple of months with stimulus and prolonged low interest rates. It makes stocks more attractive than other areas is what it is. And you're going to see price inflation in assets, not just goods and services, right? And that's kind of where it is. Mark, there was a bunch of Fed chatter over the last day or so. What did you see out of the Fed?
Well, I mean, when on our prep class over the weekend, when we were trying to identify what could send this market down this week, right? What are the catalysts? And we didn't identify very many for this week. The one theoretical one was around negative interest rates. Jerome Powell speaks tomorrow morning. It was probably the big event in a very, very light week. And there has been this chatter, right? Like futures pricing on interest rates went negative there for a little bit. And so there's this increasing thought that we are going to see negative interest rates. Now, the Fed, and let me read you some of the quotes. The Fed has been pretty anti-negative interest rates in their rhetoric. Bullard said negative rates not good option for US. Kaplan said I would be against negative interest rates. Kashkari said Fed policymakers have been pretty unanimous in opposing negative interest rates. Charles Evans said, at best, we'd have to study it more, but I don't anticipate that being a tool we're using in the US. So we have a pretty universal dialogue against negative interest rates. Here's the problem. We now have Trump tweeting today, as long as other countries are receiving the benefits from negative rates, the USA should accept the gift. Once again, Trump has never seen monetary policy that he thought was too accommodative. Like,
He's an extreme dove. He would be happy if we were -1, -2, -3. He'd love to see it more extreme than what Japan's doing. He also thinks that we will be getting paid with the negative interest rates, which is not how it works.
And then even more important for market price action, if the market is demanding, because they do this and they've done this for 11 years, we want this interest rate policy. And if they see negative interest rates as that, and the Fed doesn't deliver that, you could see the market throwing a tantrum for a day. They've done that in the past many, many times when a Fed speaker said something that was against their ultra dovish, because Trump is an extreme dove. The market makes Trump look like a hawk.
Mm-hmm.
So there's no policy that can be too accommodative for the market. And so if the Fed is seen as drawing a line in the sand saying, nope, we're not going to go here, it puts the Fed in a little box. And you can see the market throwing a tantrum. Now, it'd probably be quickly bought up if they did sometime over the next few days. But yeah, you could see that. I mean, it's a really light week on what can send the market down this week, or could send it up, which is like, and you're seeing that in the price action this week. Really Doge-esque.
And accommodative policy is even furthering the divide between the cool kids, Mark. That's why people are buying up all the tech names and all that kind of stuff, and maybe they're staying away from some of the other ones because of this asset price inflation that they're expecting on the bull side of this argument. Let's keep working through the markets. Give me FXI if you can. You know, one thing that Mark, I know you've been concerned about recently is U.S.-China trade talks and chatter and all those kind of things. I read a positive headline today, but then you're like, oh yeah, but you didn't read the other 3 negative headlines as well. It seems like there's a lot of chatter going on here. What are you reading with the U.S.-China relationship?
Well, and it's not just U.S.-China, like it's also other Western and other countries. I mean, it's not just U.S. versus China anymore. Futures got sent down a little bit on 2 different headlines last night in the overnight action. One was a little beef, no pun intended, between Australia and China, where they cut off a third of the beef exports or imports. I can't remember what it was, but basically saying, Australia, knock it off with your Wuhan lab. Where did the virus originate? Who's responsible? Nonsense. And so they fired a little shot at Australia. And then Trump fired a little shot where he said that, let me get the exact. When Trump administration ordered on Monday night to block investments in Chinese equities by a government retirement fund. So there's these little shots being fired. Nothing huge, right? It's a little, well, I'm going to do a punitive action, a very minor. I'm going to do a very minor punitive action. But then you have Peter Navarro calling this a war between China and the United States. You know, so this is not going away this year. I've been adamant about that for 7 straight days. You can expect this. Now, do Robinhood traders care about what Trump does with an investment fund? Do Robinhood traders care about cutting beef imports by a third? No, they do not. And when I say Robinhood traders, I'm talking about most money manager funds as well. But this isn't going away. And this is one of the things, other than the virus itself, that could serve as a really significant bearish catalyst over the summer if this war of words, if these little salvos continues to escalate into bigger action.
I think the biggest wild card there is going to be our president. There's no doubt about it. And whether or not he wants to use China as an election issue. And we just don't know how that is going to play itself out. But chatter and obviously the rhetoric is ramping up there. It's going to be interesting to watch that moving forward. Let's keep working through the markets. Quick peek at gold here. Noah, it's stuck in a range. There's not much there. Quite frankly, with the gold markets, as always, they've been just rattling back and forth and back and forth. I read a report out of Citigroup where they were calling for a $2,000 price target by next year, but they also said that, you know, you might see a range for some time between 1,600 and 1,800. Mark, we're stuck in a range here. It doesn't change my outlook on gold. What about you?
There's nothing I feel better about than gold naked puts at lower levels. I've been saying that for 3.5 weeks. I literally, the only thing I'm worried about is when gold takes off, if it does, that all I am left with are some naked puts in my hand in which I made $30 here, $40 here, $26 there, right?
Mm-hmm.
Like gold is gold. It's in an inflationary environment, in a geopolitical, we saw that gold did great in the trade war when it escalated. Man, I don't know how you don't want to own a little bit of gold in your portfolio. I literally have zero idea. But Robinhood traders don't like gold, right?
Doesn't pay any yield. It doesn't have the big pop in the upside, but that's why the veterans have to come in and bring some sense of reality to the situation. No, there's nothing here that I'm concerned about. Holding support. I know the moving averages are kind of pinching there. What are you seeing in that chart?
Just consolidation. It's just holding. It's kind of got a pennant type pattern in there up at 1,700. And the tighter that coils up, it'll break, and it could break up or down, and I'm still bullish. Doesn't really matter which way this consolidation pattern breaks out because the fundamentals are there. It's not, it would take a margin call, I think, to cause a steep sell-off on, traders and other parts of the market, which I don't see happening anytime soon.
And that is our top-down analysis. We're breaking this show into the same sections each and every day. Now we're moving into stock talk. A couple things that I'm reminded to do each and every time we make a transition. Number one, give me a thumbs up. You know, we appreciate the analytics. It's my job to ask for them. So I'm going to keep asking until you guys do give me that thumbs up. If you enjoy our content, whatnot, click that button. If you're new to our channel, click subscribe, click the bell. We hit the 8K mark here today, Cody. Pretty cool. You know, I thought that was really, really cool to see that. And, you know, keep coming back each and every day.
Guys, thank you so much for all the subscribes we're getting out there. And tell your friends if you like the content we're putting out. Keep just sharing. Word of mouth is a fantastic.
And go ahead, Cody. Yeah, I mean, word of mouth is big, and the analytics obviously are improving. I think we just got to kiss Google's butt. It seems like there's a correlation.
Total correlation. Google's amazing. The YouTube is the best thing to watch. You don't need Netflix. You got YouTube.
Best thing they've ever done, right? Yeah, I'm with you. And by the way, one real quick thing: if you are interested in reading our blog each and every day, our tackle today is something that Mark and I put together. We also have featured columnists come in and do it. I've dropped the link in the chat. You can go sign up for that blog and get more content from Tackle Trading. Let's talk companies here today, guys. There's a bunch I want to get to, but Tesla's first. I mean, we have to bring this one up. Elon Musk defied the public health order in Fremont, California. I think it's Fremont. And he opened his factory, Mark. He basically said, come and arrest me if you want to. I am going back to business. This is basically just the craziest thing he's ever seen. What does he call it? Fascism, Noah, I believe. Pretty severe rhetoric.
Yeah.
Noah, are you following this story, by the way?
Yes, and good for Elon. I'm in the Elon camp here for as interesting as he is as a character and to watch. I think people jive with the right to work, and it's calculated risk. And if you don't open back up, well, how does Tesla stay in business? They're a debt-driven company. Period.
It is an interesting thing. And obviously, I mean, I am a libertarian at my heart, really. I'm a country kid, Mark. We grew up in a small town. We don't really trust big government. Government overreach is becoming concerning, whether you're on the left, right, or center. Obviously, this is a complex issue in many regards, and it is splitting this country. This idea of the reopening now or reopening later or whatever it is, we're going to open up.
Listen, I'm going to give my 2 cents on it. I believe that this is a workers' union versus corporation, and they should decide. See what Major League Baseball is doing. You have the union, which is the most powerful sports union, and they're negotiating, you know, worker safety, right? And they're negotiating with Major League Baseball to decide how they want to open on behalf of all of their workers and from management, and they're deciding together. You don't need a congressional committee or government to get between those two groups. They can work it out for themselves and find the best accommodative issues for their groups. Now, if you don't have a union, that's where I have a little bit of problem coming in. If you have no one speaking for the workers, but the government needs to get the hell out of the decision-making process as a general rule on everything in life. As Ronald Reagan, the great American, said, the most dangerous words, and I'm paraphrasing, you can ever hear are, I'm from the government and I'm here to help. Government's incompetent. They're inefficient. Market mechanisms and capitalism works when let. So while I think Elon Musk is not the great next Spartacus in his movement, open up. Just be careful and cognizant of your workers, especially those with pre-existing conditions.
And that's on that exact point is exactly where it should be. It should be less than the federal government, because every single county, city, company, area is different. You know more about your own company and you know more about your own county than people in DC do. Trying to have the people in DC dictate everything that's going on in every little facet of the continental United States does not make sense.
And I think you can be pro-union and pro-business at the same time, right? It's just government, get out of the equation. I mean, government, get out of the equation.
Yeah, workers' rights need to be protected. And obviously, there has to be safety measures in place and things like that. I mean, there is a role for things like OSHA. And obviously, I mean, you come from manufacturing or construction, all that kind of stuff. I mean, there's healthcare risk here, guys. You know, there's no doubt about it. I'm with Elon. I'm with everything you just said, Mark, and I love the amen. There's no doubt about it. Cody, you just, I think you just had the happiest moment you've had in days when Mark was going off on his rant. I could see your body language and your facial. Yeah, you loved it. You
Oh,
you
I
loved
absolutely did, because that's my
That's the kind of talk that gets
government.
me going in the morning. That's more
Right.
potent than Gino's coffee.
Yeah. You got to protect the individuals, though. If somebody says, listen, Elon, I have pre-existing conditions at this time until we have more clarity, I don't want to come into work, and he fires that person for cause, I would have issue with that.
Yeah, I'd be okay with that. Yeah, I would have an issue with that as well. It's like, I'm just this overarching umbrella of everyone needs to do this because we think everyone needs to do this. It's like, wait, no, that doesn't make sense.
Yeah.
Individual liberties are more important than federal government.
And there is a price to be paid for individual liberties, but that doesn't take away the importance of individual liberties, right? So now go buy Apple, team.
Yeah.
You know,
well, I think Elon also threatened to sue the state of California here as well, basically for the lost production and all that kind of stuff. It's going to be interesting how some of this stuff plays itself out over the next several weeks and several months. This is a growing movement. I'm not just seeing it in Teslas. I'm seeing it in coffee shops in Colorado and hair salons in Texas and all that kind of stuff. There are some people that are just saying, screw it. I'm going to open up my business because I can't let it fail, you know, and I very much understand. I understand that plight and that understanding. And Noah, you're right. They're a debt-driven company. They have to manufacture cars. They have to. You know, they got to stay in business. Really interesting there, obviously. And his Twitter feed is always very, very fascinating. Go check it out. Next one I want to talk about is PNC Financial. They decided to unload a big $17 billion stake in BlackRock Financial. Give me a quick look at PNC if you can, Noah. And that's not a great looking chart. And now BLK. And even worse here, you know, BlackRock is one of those, you know, engines I think that is facilitating a lot of the Fed buying programs and whatnot. The Fed announced today, Mark, they're buying ETFs of corporate bond ETFs. Even, yeah.
Well, they announced that many weeks ago. They're just actually starting doing it.
Yeah. Yeah. Doesn't BlackRock benefit from those programs? Don't you think?
Oh yeah, they're gonna make a ton of money. I mean, they're the middleman. Like BlackRock has, like, I don't know who BlackRock knows at the Fed. You know, I don't know how that relationship goes, but they got the proverbial emperors. You are the one allowed to make free money in facilitating our program. I mean, BlackRock is very enticing. That just financials are not part of the cool kids right now. Like, even though BlackRock doesn't have some of the same problems bank does, and I think there could be an attractive setup on BlackRock coming up. They're just not, like, once again, it's BlackRock, right? Like, your average retail trader's just not excited about BlackRock. So
in the financial space, though, I think fundamentally this is probably one I would be interested.
Oh, absolutely.
Because, you know,
100%.
if there's anybody of the Wall Street firms, big banks, all that kind of stuff, BlackRock, in the only reason why it's down today, by the way, is because PNC is unloading their shares. So it's just one of those news-based reactions.
Since we're talking stock, I just saw a headline. Like, I monitor the headlines consistently. I just saw a headline I've never seen in my life. Chesapeake Energy stock price cut to 0 from 30 cents at CFRA. I have never once in my life seen a stock analyst cut a price to 0.
That's
it's the first time I've ever seen that headline. 15
by the way,
years doing this.
They were in the news. Their management came out and said, we're probably going to be bankrupt this year. You know?
Yeah.
I mean, we're going to see, and this is one of the old dogs in this space, right, Mark? They've been around for a long, long time. Ugly chart. And it goes back to the winners and losers in the market right now. I don't know if I could short down here. I don't even think it would be shortable. Are there options on this, Noah? Let me take a peek real quick.
I know there used to be. I don't know if there is now.
Yeah.
I don't so.
Not great liquidity there. Look at that June contract, maybe. For a $10 put, you need $4.
Look at the bid-ask spreads on that bad boy.
Mark, you got to pay $4 for the at-the-money put.
Yeah, so That's nice.
Only
Yeah.
way to beat that's with a butterfly.
That is the market assuming bankruptcy and some low prices. So, yeah, Mark, that dropped your price target to 0. I think
Is that a
that
1 to 100 split that I
It was a
saw?
200 to 1. 200 to 1. Yeah.
200 to 1.
Wow.
they must have been
So-
worth what, a nickel
Wow.
at that point. Wow. Anyway, all right, move past Chesapeake. Simon Property Group, I did want to talk about them today as well. Give me SPG if you can. I know, Mark, REITs are not the sexy areas of the market, but these guys actually give a lot of information about what's happening in retail. And the only real takeaway, I mean, the market shrugged off terrible earnings, by the way, but the SPG came out and said they're going to reopen 50% of their stores in malls across the country. Are you interested in any retail plays at all, Marky?
Listen, the market has priced in completely that the economy is going to reopen, right? That's one of the reasons for the bullish behavior. It's not a question about the economy reopening. It's going to happen, has to happen. We don't have any choice in the matter. It's a matter of what does it look like? Because you are going to have a segment of the population, and understandably so, that doesn't really desire to go hang out in malls. Not everybody, right? Some will flock. You will see consumers return on some level, but you are going to have some that they're just going to be more cautious. They just are. I mean, you see that split in America on some level. Like I saw a poll out of Great Britain, and we're not as dramatic, but like 9 out of 10 Brits in the poll says, no, let's stay locked down a lot longer. So Simon, yeah, things are going to reopen. What does it look like? Can they be profitable? It's like your average restaurant is not built to succeed at 1/3 or 1/4 capacity. Like, it's just not. Like those movie theaters weren't built to make money if people are sitting 6 feet apart, 6 seats apart, whatever it is. So it's going to be really interesting to see what the consumer dynamic is. And so, I mean, if the market was extremely bullish that everything is going to be normal, why is Simon Property Group still here hanging out at the lows? It's not. It's just betting on the cool kids, betting on companies they know will be around in 3 years.
Give me the ES on a 5-minute chart. Just want to take a quick peek. A couple of comments in the chat. The VIX is climbing, and the S&P got a big red candle on the intraday. We'll see. I mean, it's still on a doji here on the daily. Yeah, down on support here. Down on support. That's an interesting
Well,
little.
I think Fauci's
Please, somebody alert Powell. We can't have this.
You can't sell five.
I think
Yes,
Fauci's
yes,
testifying right
yeah.
now. Maybe Fauci said we're all going to die if we reopen. And
Well,
listen,
yeah,
and I like Anthony Fauci. I do. I understand why some people don't. I do, but Fauci is like Warren Buffett right now to market participants. Old guys that have been around with opinions and nobody wants to hear them. Like that's just the rate, whether that should be the case or not. I mean, look what Buffett, can you believe, I mean, seriously, that the market basically said, I don't care what Warren Buffett has to say, but they don't.
Well, they dismiss him as the old guy who's a value investor who invests forever, and he's just not hip with the times, Mark.
Warren Buffett says, be careful. Anthony Fauci says, be careful. Nobody cares. I'm not saying that's right. I'm not saying that's wrong. I'm saying that's reality.
Yeah.
For investors. So.
I don't know what he's saying in the testimony right now, but I think this was already leaked in his pre-prepared comments that he was going to talk about how there's going to be more infections and more death from the reopening. And Cody, you've even said that as much. I mean, we know there's going to be an increase in spike in infections. So we do know that. But market obviously selling a little bit on that intraday. We'll come back to it if anything else continues to develop. Back on the charts on companies.
Real quick, 10 minutes. The reason I think these comments, like, even though it is known that, when the economy reopens, there's going to have to be guidelines, there's going to have to be distancing, there's going to have to be a controlled plan as to how this happens. But we still know that infections are going to go up. With infections going up, death count's going to go up. But I don't think people like hearing it. The human brain does not like thinking about negative things. The human brain wants to look at all the positive stuff. So whenever it's reiterated something you already know, you still don't like hearing it.
It's so ridiculous. And once again, my expertise lies in analyzing probability in gambling, right? So just take about what I'm about to say like you're hearing it on an elevator from random Joe dude who's just spouting his opinion without any knowledge. Like our response to the virus cumulatively is stupid. Either go Sweden style or go South Korea style. Both of those make sense to me. Either let's go for the herd immunity route and let's just open up and deal with it and trust the citizenry, or go the South Korea route with intense contact tracing and monitoring and this robust system. Like, those both make sense to me from an argumentative level. What doesn't make sense is this it's like we're trying to avoid anything bad happening to the economy to death and still have, I don't know, it just doesn't make any sense. Choose South Korea or Sweden.
Everyone's going to become Sweden. It's just a matter of when.
Right. Like the whole argument, we're not going to the virus is there. It's there, right? And whether it's just another flu or worse, or I don't know, right? But like, choose one, and I think America's gravitating more towards the Sweden model. And once again, it's not right or wrong. It's just what we're doing, like observing trends. And what implications does a Swedish model have on the markets, on stocks? I think it's bullish. And this is callous, but if you accept death as part of the equation, death doesn't move the market any longer. I'm not saying that's right or wrong, but I think we're heading towards a Swedish model. I mean, Noah, I know you advocate that. I mean, do you think that's where we're heading as a culture?
I wish we would go that route. That's kind of my take on this. I personally think that from all the data I've seen, I think the Swedish model probably makes the most sense. It's not counterintuitive to how our immune systems actually work. Everything we do to stop the spread, actually staying indoors and all of those crazy things don't necessarily help our immune system. So I'm one of those fans of, let's just get out there. It's a calculated risk. And why do I think that there's a joke out there somewhere with Trump and the Swedish model or something like that? I don't know why that came to my head, but there's got to be a joke there somewhere.
The plan is going to be those that are vulnerable, those that are sick, those that have underlying conditions, those above a certain age limit. They're going to say, stay at home. They're going to say, if you live with someone that has one of those, stay at home.
Wait, the cues are red right now.
Live by yourself, your risk is 1 in 10,000. So when the option is, bunch of marbles, you pick a marble out of 10,000. If you get that one, then unfortunately, you got the bad one, you're going to die. Or the other alternative option is you don't reach in and pick a marble and you lose your entire income.
Hey, okay, so now, why this has important for the market is, let's say we adopt the Swedish model. Tim, the Swedish model carries with it more death in the short term. It just does, right?
Yeah.
We're not going to avoid those deaths. Now, and I hope as a society, we particularly protect people with comorbidities, our nursing homes, those individuals we know get hit hard with the virus. So I send that out, that hope. Do retail investors, in the face of more death, do they remain bullish? Because that is the big market macro question that I've been wrestling with over the last 5 days. These are the trends we're heading. They carry with it more death. Do retail investors stay bullish in the face of mortality, or does it spook them that, more death is going to mean a second wave and more lockdowns? That's the question.
I don't think the data around the virus is going to spook the markets, by the way. I just don't. I personally don't think I think they will stay bullish, to answer your question, because coronavirus death is something that they've been shrugging off now for about 6 weeks. They don't care about the data. They don't believe the data. They don't believe that the death counts are what they are, and they don't believe the infection rate is what it is. So they're ignoring all of the coronavirus stuff. I think what's going to happen, Mark, is that you have this positive assumption priced into the market. What may affect them is if you get closures. Let's say that you have a massive viral outbreak at a factory in Utah, and the county says you got to close down for a month. That affects workers, right? Or if you have some plant in some Amazon factory that has a viral outbreak and Amazon can't deliver packages from that factory for 3 weeks until they deep clean it. Or if you have worker strikes saying, I'm not going in to do this work unless you provide better health insurance and better pay and all this kind of stuff. I think the themes and the storylines are going to change because they've moved past the virus stuff, quite frankly. I mean, people are set in what they believe on it, one way or the other. And I think that human beings are going to socially distance if they choose to or not. It's going to be an individual's choice. If they have, like you say, a premorbidity, or if they have some kind of, thing that affects them, they might decide to stay in based on their own personal liberty. And I don't think that bullish investors care about viral death, Mark. I really just don't. Not right now. It would have to be a massive wave in the fall on a mutation, on something that we haven't planned for yet to affect it.
Well,
And-
and if they don't, how do you not get in the bulls camp? On some level, right? It might
But
be a
strategic,
conservative.
it's where, right? I mean, listen,
Yeah, it's where.
The bull candidates have been off the charts recently. We've been talking about the momentum, Activision and Microsoft and Apple and all these names that are just running. Microsoft, I asked Guy Cohen on the podcast a week and a half ago, what's your favorite company? He says Microsoft, right? Everybody loves certain companies right now. The Shopifys, the Zooms, the Gileads, even the Modernas, some pharmaceutical names, things like that. So you've got the virus plays, and then you've got the economic plays that are not sensitive to human behavior changing. There's a reason why the airlines, give me Boeing if you can here, because there's still going to be winners and losers. Boeing's CEO came out today and said, listen, you will see major airlines go bankrupt this year. And they only think that flights are going to be 25% of capacity by September. Even if you reopen everything, you end every lockdown, human beings won't necessarily behave the same. So you're going to have winners and losers. And in fact, they think it's going to be 2 to 3 years before airline demand comes back. Who buys the most flights, Noah? Companies.
Yeah.
Are they going to put on big events and send their workers all over the world and country when they've now learned they can move to an online model and work from home? Are you going to have Google rent out an entire casino hotel in Vegas and put 5,000 workers down there for a week when there's a lot of people in Google who are going to be personally like, I don't want to do it. We don't have enough information. So Mark, I think it comes back to the theme that we've been talking about all day. You're not going to get the bulls off of the bullish stocks until the technicals break down. And that who knows when that would happen. But the bears and the bearish stocks and some of the weakness in companies, it's not going away anytime soon. I mean, Mark, what was your thought on what he said about airlines with Boeing?
Well, airlines aren't part of the cool kids.
Yep. You got the cool kids and you got the other ones. Boeing is not one of the cool kids, is it?
Because I think your average investor, I think your calculated investor, I think your analysts such as myself, you're like, I have no freaking idea how this plays out with the virus and the economy over the 9 months. There's lots of troubling things you could worry about. I think people have literally adopted the one day, these are the companies I want to own. And they're part of the cool kids. But it's not in airlines, because a lot of companies are going to have those future headlines. And I'm not saying this is going to happen, right? But Delta price target cut to 0 at random analysts. I've never seen that headline. I don't know why. But that's the reality we live in right now. There are going to be winners. There are going to be losers in this new whatever economy moving forward. And I think from a trading point of view, I'm going to be very conservative on my investing part, right? With pro members, I've shared how I'm approaching that. I'm going to just do that. What I'm starting to do, and this is why I wanted to ask you guys' opinion on the virus and that, is that I think I'm going to have, out of those cool kids, the best bullish setup going every single day. Go to Beyond Meat right now. I'm advocating Bitcoin, and last week I was talking about that trade setup on Beyond Meat. Go to DraftKings, I think ticker symbol DKNG. I talked about that as the cult stock last week. There are just names that are sexy. That doesn't mean you go trade them blindly. That's dumb. We teach our pro members how to identify patterns and setups. But I think you want to identify these cool kids, look for trade setups, develop a watch list. I think that's how you approach the market the rest of the year. And I think it's a pretty easy playbook. So I think I'll probably always have a bullish trade. I'm taking my member of the team up a notch, Tim.
Mm-hmm.
What is the best setup I have going into that day? Is it Amazon? Is it Google? Is it DraftKings? Is it Beyond Meat? Is it Tesla? Is it Uber? Is it Clorox? Is it Zoom? Like these, is it Activision? Look how fast you are with those ticker symbols looking. But part of these cool kids, and like, who has the best trade setup? And I'm going to have a bullish trade on that trade setup, and then just rotate it. I'm not going to go crazy. I'm not going to go place 12 bullish trades because market can reverse, and when it reverses, it's going to reverse fast.
Mm-hmm.
But I think tactically, not only am I going to look to acquire things at lower levels, I'm going to find the best trade setup. And Noah, and I want to talk to you about this. I
Say
believe
taco to me.
I heard taco.
I
as
heard
well.
taco to me, and it is Tuesday.
I'm going to
so
taco to you.
I'm
Hey,
on
listen, I'm
board.
from a small coal mining town. If I want to say taco to you and roof and talk like a country hick, I'm going to do it. All right. And I want to talk to you about an advanced concept, Noah, that I've totally bought into based on overnight price action and anticipatory breaks. It is the buy before you get confirmation on a breakout. So let's say I have, and I'm all on board with this. I think we have unique market conditions. I think we have overnight price action that drives this more than intraday price action. If you took all of the intraday moves to the upside versus all of the overnight moves to the upside, the overnight moves dominate in the last 6 weeks. It's an advanced concept, and if you're hearing for the first time, we can maybe explain it more at a later point. But based on that, if you get a nice resistance technical breakout level, buying it before resistance breaks, and if Matt was here, he'd be losing his mind.
So this would be the perfect time to talk about it, right?
So yeah, so he'd be like, no, because Matt, and I'd be like, all right.
It's heresy. It's heresy for the technical school that Matt and I trained in, is buying before the breakout. And I understand why, because once you get the breakout, the statistical probabilities of a price run increase. It does give you an edge. But I personally started buying before the breakout a couple of years ago, Mark. I started just experimenting with it. And a lot of it came down to not so much that I thought buying before the breakout was the best move. I knew how to manage and hedge it well enough that if I was wrong, I wasn't that extremely worried about a failed breakout.
I mean, let's just
if
look
you're
at
gonna
shop
buy before the breakout. You need to absolutely make sure you know the risk of it, because you're going to have an increased risk until you get that breakout to actually happen. So you need to make sure you're pricing correctly. So if you're going to break the trigger rule and buy before the breakout, you need to decrease your position size and trade accordingly. You need to know how to hedge it if it starts going against you. You need to understand exactly what your risk is before you enter that trade.
Yeah. Well, I've done simple things like throw one contract on it, just see if it sticks.
Well,
and then if it breaks out, buy more.
Hold on. Let's call it like it is. Mark is not a swing trader. So Mark is a probability trader. He assesses risk reward probability based on the way he's perceiving market conditions.
Right.
Mark is a professional at assessing game theory. Okay. So it's a completely different model, right? Because if we were swing trading, you do not buy before the breakout. Period.
Right. That's what I'm saying.
You have to get confirmation.
Heresy. What are you talking about, Tim? That's crazy talk.
But if you are a Mark who's a game theory analyst and a probability trader, you're willing to do things outside of the box a little bit, Mark, more than say somebody just traditionally trained, right?
Yeah, I mean, go to Shopify, for example. And once again, like when I'm looking at a bullish trade, I mean, you look at the breakout, and let's go back a few days on Shopify. Let's go back 1, 2, 3, 4. And if you could just, when you had that nice high base setup, clear resistance area on the day before it broke. Like, listen, there is nothing wrong with waiting for confirmation. There is nothing wrong with waiting for that additional signals. But what we're seeing time and time again, and once again, this might be unique to these market conditions. I wonder if this is more of a new normal, is you have anticipatory over the night buying of these technical signals. The overnight action is front running the technical breakout. And so if you want to get ahead of the front runners on the overnight, when you have a clear trading signal that everyone sees, like you did with that high base pattern on Shopify 6 days ago, getting in, let me give you another one. Getting in before the breakout has been extremely profitable in skewing the probability of risk versus reward. Go to ServiceNow, NOW. Like, once again, go to the breakout that occurred on that thing. What was it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days ago. Very nice high base pattern, not high base, resistance level. And you had front running action gapping it up. Now, if you want to wait and be patient, absolutely, that's probably the best advice for someone new. But for those advanced traders out there that like to do back testing, go look at these resistance areas that are very clear. Look at the overnight action, front running it. People are front running price action overnight right now. They're front running price action in the overnight markets.
To be fair, though, I mean, to push back a little bit, you could throw a dart at any one of the companies that are on the team right now, and they would have made money in the last.
Well, yes, but I'm talking about time. I'm talking about tactical short-term swing trading, skewing your probability to your side.
Mm-hmm.
Like, once again, very advanced concept, but I'm 100% right that the numbers point this out and have been a very profitable way to buy before resistance, right? Mm-hmm. So listen, Matt would be losing his mind right now. Absolutely losing his mind, because once again, this goes against time-tested theory, time-tested ways to approach swing trading. Doesn't mean that the data isn't overwhelming on this front-running effect that the markets have right now.
Interesting. A couple more companies I want to talk, and then we'll get into some setups and whatnot. Berkshire Hathaway, if you can. They actually got approval. Very interesting project. The Department of the Interior is letting Berkshire Hathaway use government land to put a solar farm in Nevada. And actually, they think this is going to be a $1 billion project over the course of 2 years. A lot of jobs created. Obviously, the chart is not impacted. The fundamentals of Berkshire are not impacted. But I just think these are the kind of moves I like seeing. It tugged at my heart a little bit here, Mark, to see a solar farm going into Nevada, which can power 260,000 homes. I liked it. Noah, are you a proponent for solar energy, by the way?
I'm a proponent of solar energy, clean energy, mostly nuclear energy, if you really want it clean and lots of it. But that's just
all
me.
right. So
I'm a pragmatist on that.
Yeah, but Berkshire, dude, they're not, dude. Uncle Warren, he's not cool, dude. Nobody cares about what.
Nobody cares what he's doing. He's buying solar farms.
That chart is ugly. That chart is really ugly.
All right. So Senator Graham and GOP senators have introduced a bill sanctioning China. This is what's caused the markdown, the hit off. So that's what the negative price action, once again.
What did he say?
It's a specific bill sanctioning China introduced. Get used to it. I'm telling you right now, I've been saying this since the podcast last Monday. I've been saying it for 7 days. This China thing is real. Now the market's going to shrug it off. I have no doubt that, the market could buy it up because, once again, who cares? That's a bunch of old men yelling at China, right? But this China thing is real. And think about how we had with COVID-19 in January. You had all this COVID news in China, and it sent up down for a day, but then the market was really. We are starting to pile up on the China news. We're starting to pile up with specific little actions. All it takes, market can shrug off all these little actions. All it takes is China to say, boom, and you're down 1,000 points. Be tactical in this market. Mm-hmm. Be tactical. Do not overextend yourself on your positions.
Well, it's a good time to probably learn how to hedge, quite frankly. Put options when the VIX is lower than when it was at extremes. Now you're getting back into prices where you might be able to justify some insurance cost, quite frankly. And the S&P is stuck up here in the range in the model. I mean, if you're long equity, Mark, nothing wrong with adding a few put options long-term on leaps if you are concerned about the downside risk. You can use those collars, Noah, in a lot of ways. I know you talked about it last week in the Tackle 25, right? When you did that mastermind group.
Yeah. We had a great talk about how to manage the risk on positions like that. And I think that's kind of an important, well, not kind of, it is essential that you really dial in your risk management, not just on individual stocks, but on a portfolio as a whole. And so there's, it's real, this position sizing, risk management, stop loss, it really just comes down to capital preservation, Tim, keeping those gains.
Mhm.
All right. What do you think about like on your bullish play? Because I'm going to have a bullish play on tech sometime. Don't you have to go options? And I'm going to like and not buy stock outright in your trade. I'm not talking investing. I'm talking about your trading. Okay. I worry about a nuclear hand grenade being in this China United States coming out of nowhere, like a true hand grenade, a thing coming out of China specifically, because I think Trump will nitpick. He'll be like, China sucks, and then I'll do a little thing. GOP, I'm going to introduce these little China saying enough, and they launch a massive hand grenade that absolutely sends the market down. Well, once again, this is something I worry about. Now, if I'm doing an option trade, the most I can lose is the value of the option in that trade, right? You know?
Mhm.
And so like, if I do stock, then I could be looking at a significant loss. And I'm thinking from a risk reward is how I'm analyzing.
What if we just go with not just stock, but what about we say something to the extent of like close end risk graphs or a strategy
There you
there,
go.
or something like that? Because if you have an open ended risk graph,
bull call spread,
yeah, speculate with something that's got fixed risk for your speculative trades.
Mhm.
You know,
Mhm.
because I don't want to wake up, you know, as a member of the team and see the market down 8% because China did something. And I think the real possibilities are there that you have that moment. Now, once again, if all of it is a salvos, but once again, like you said, Tim, I approach this from a risk reward. So I'm happy doing bullish trades on setups. I just want to have that risk contained so that one trade doesn't ruin my month.
Well, you can contain risk in a lot of ways. Position size. I mean, if you only spent, let's say, 2% of your account on the equity position, I think you can go long equity. It's just you can't lever up. I mean, because even if you did take a 10% hit on a small position in equity, it's still a small risk in your account, right? So I think you still can play equity as long as you trade small relative to your account size. You know, if you're putting 10% of your account in on a high momentum play that can move like crazy, you know, or 20% of your account or whatever it is. I mean, that's a different play there. But I like the idea of options, Mark, as well, and closed end risk graphs. And even some of the stuff, Noah, you do where you go long option into the bull call spread for like risk-free trades.
Right.
I think there's a lot of techniques that make sense in the market right now, in my personal opinion. I like it. I like it. One more stock I want to talk about, then we'll get some ideas from everybody. Actually,
hey
two.
Noah, will you do a Wednesday night show in the coming weeks? Because I love your buy call, convert it to bull call spread, risk management technique on that. Will you do a show on that, teaching individuals how to do that at some point? I think it would be really valuable.
That would be a lot of fun.
Yep. Twitter, real quick here. Twitter is now labeling tweets that go against public health orders as misleading, and they're letting users know if they think there's false information in them. Do you think this is corporate overreach, some form of corporate censorship, which, by the way, I know isn't a thing? Censorship comes from the government. Noah, do you think it's too far? What's your read on this?
Well, I have a lot of thoughts about it. One, you fight bad information with good information, not censorship. Labeling something misleading, that gives them a very powerful stick to control the narrative. And that's interesting.
It's a very broad term.
Yeah. Plus, like I've recently seen a few things like videos being banned on social media.
Mhm.
And that's one of the things they need to understand is, well, if you ban something, human nature is going to just go seek it out more. Like the fact that they pulled off some video off of YouTube drives the conspiracy theory mind into like, why did they pull it off of YouTube?
No,
Why did they pull it off of Facebook? Let's go see it. That must be true.
I heard that Plandemic, the video, was banned. I went and found it
immediately because that's what you're going to do when they take some.
You tell me I can't walk on the grass. I'm going to walk on the grass.
Yep. It's exactly what happened when they took away the old Coke formula. When they came out with the new Coke formula, even though it won in every taste test they ran, when they took it away, all of a sudden people freaked out.
What was it? It's a is it like the Streisand effect. I think it was Barbara Streisand or something. Someone had like a video of like the beach and her house was in it, and like no one saw it. But then all of a sudden she got all up in arms, like no one needs to be taking pictures of my house. So then what did everybody do? Like
now I know where Streisand lives.
Yeah,
exactly.
I want to see this house. Like what's the big deal? And
It's a
It
scarcity
was-
principle. It's one of the 6 core principles of human influential patterns. Like if you want to really market something, get it banned.
Mhm. This is tricky for me in many ways, obviously. I mean, a consumer doesn't have to use Twitter, number one. Isn't Twitter mostly just disinformation? I've been on Twitter. It's like
Define
the
disinformation and
trolling,
information.
the trolling and the jokes and the funny accounts and all that.
Oh, yeah,
That's Twitter. So
Never trust anyone that doesn't have a picture of themselves as their profile picture, or they have some random name. Those are the people those are just fake accounts people create to get on there and raise hell.
it's a scary thing to me, and I don't know where I land on all of this because, quite frankly, we get a lot of outside influences that are very powerful. You name whatever country you want or any kind of powerful interest around the world who are using social media in the US to move all kinds of things, public influence, public opinion. And so, yeah, I can see that a social media company has some kind of, they have a need to try to protect the public good, don't you think?
Do
I mean,
they?
Facebook
Whatever
is,
happened to good old critical thinking?
oh God, no, are you kidding me?
I'm just
not seeing
saying
that. I'm
wishful
not seeing that in the
thinking.
country right now. You know, I get it. I get
All I know is I want to be a fly on the wall the first time that Twitter labels President Trump's tweet misleading or dangerous.
You mean
wanna
that hasn't happened yet?
I want to be there when Twitter does it to Trump because that's going to be great theater.
Yeah.
I love those memes where the people are eating popcorn greedily, like sitting there like that. That's a great gift for anything like that.
Sure.
Just
get your
grab your
popcorn ready.
popcorn.
Yeah. Well, we're seeing this in social media over the last couple of years, though. I mean, even Zuck has come out and said how they have a social and ethical responsibility to try to cultivate information and whatnot. And it does just drive the conspiracy people and the people who don't trust big government, big corporation, Noah. It just triggers them. They're like, okay, well, why are you pulling this information? Why don't we have free flow of information? I'm a free speech guy. I don't like censorship. I do not like it at all. But if something is patently and obviously false and could harm people, doesn't Twitter have to pull something?
Or don't they just have to provide extra information next to it? Like immediately put it into your feed. If you're considering this, maybe you want to consider this. That to me is more effective than banning it, because the minute you pull it, it does have a backfire effect on people's minds.
Yeah, I don't know what the right answer is here, but we're seeing this trend. There's no question about it. One last one, another trend that we're seeing. Give me Adobe if you can. I did read some data I found very interesting out of Adobe. Underwear, or excuse me, pajama sales were up 140% in the month of April, while bra sales and pant sales were down 14%. Mark, apparently on a lot of these Zoom calls, people are not wearing pants, is what I'm picking up on
Pants
that.
are for suckers. You've heard me say it before. I will say it again. My dad used to always tell me, he said, no, dress for the job you want to have. So I started dressing like I was unemployed.
Yeah. So you can be an entrepreneur, wear your PJs and get up and trade the markets. I mean, that is the life of being at home. There's no doubt about it. I thought that was kind of interesting. I guess you don't need a bra either. Is that what I'm picking up on? Bra sales way down as well. Don't need one if you're just hanging around the house, I guess.
I could probably use a little support after the COVID-19 pounds I've added. So possibly, maybe.
For sure. Yeah,
There's
the
been two
COVID-20.
I need a bro.
There's been 2 trading halts. Pull up Grubhub. There's been 2 trading halts on Grubhub today, not in the way that we're used to, on buyout rumors from Uber. On buyout rumors, Grubhub is saying that Uber has made an offer to Grubhub.
So one bad business model buying another bad business model. Let's buy it. Yeah, that's a great idea.
So
interesting. So they've halted trading a couple of times. It's obviously spiking on that information. Look at Uber. What did the price of Uber do?
Not as much, not as big. I want to see that down on a 5-minute chart. See if we can see where they halted it. Yeah, I see a little random intraday gap. That must have been the halted trading right there a couple minutes ago. That's interesting.
Yeah. Uber's actually up on the information. So the acquirer is also rallying. This is one of the cool kids right now, Mark.
Well, Uber's kind of a cool kid. Because when you look at,
how does the rumor of a buyout benefit the stock? They have to pay premium to buy the company.
We live in a world where I I'm looking to buy Bitcoin. I'm advocating a Beyond Meat to the upside trade. I'm buying before resistance. If you think your old grandpa rules apply anymore to this market, then you need to sit down and have a long talk with yourself, right?
Yeah.
So
I got you, brother. I got you. All right, that's Stock Talk. We're now going to be moving into our last section of our halftime report here today, which is our coaches corner. A couple things. Number one, we actually had a really fun podcast with Jake yesterday. Trading Justice usually releases the podcast on Monday night. If you are not a listener of our podcast yet, check it out on the website or check it out on iTunes. Trading Justice podcast. You can find it on any podcast app and download that. If you're still watching our show right now, give me that thumbs up, click that button, click subscribe, and click the bell. Come back and join us every day as we do this show each and every day live at 12:30 Eastern. Let's talk stocks here, guys. Noah, what's on your radar right now?
Well, I've been keeping my eye on Visa and MasterCard. Both made our scouting report lists here, MA, and we got kind of that high base potential breakout, watching those for the upward movement and price confirmation. And I've been watching Boeing on the bear side. I think that's going to break down, and I think that they're in for a world of hurt, target 100 easy, but maybe below that. So those are a couple of the trades that have been on my mind. And then also I've been keeping my eye on work still, just watching to see if this breakout develops anymore. Looks like we've got a little bit of retest in the 30 zone. So those are just a handful on my radar. And then from the bear side, I also thought Hershey had an interesting bear pattern forming up.
Interesting. Yeah, break down below 130 there. I'd be interested there. And you're going to have increasing cost on companies like this, Mark. These food companies, consumer staple companies, defensive plays, they're not on the team right now, are they? You know, they are not on that bullish buy everything FOMO rally, because who wants to own a candy company or a food company right now, Mark, when you can go play all these tech momentum names? A couple for me, and then Mark, I'll let you kind of finish up. EA. We talked Activision on the podcast, very popular company. Obviously, gaming has been hot. EA's got a high base up there, guys. I'm still watching that one for a breakout.
You know what gets me pumped, Tim? That old EA Sports.
Oh, yeah. I love it.
Game.
For sure.
That little tagline right there, that kind of gets my blood pumping.
What's your favorite sports video game of all time?
Madden.
Is it? Not Tecmo Bowl?
Oh, well, Tecmo Bowl. Yeah, that's just pre-Madden, right?
RBI baseball. You know, there were several.
I liked when they used to have the NCAA.
I used to love the tricky games, the snowboarding games. Those were a ton of fun.
Yeah. Look, watching gaming real close, match.com. If you can, MTCH. Gap out pullback filled on that information. We're sitting on a little doji here. I kind of like the technical setup. Mark, you already mentioned this one, but TEAM is on my list as well. And it fits the narrative. It's been just one of those hot, and it's really just a Momo runner up here. There's no question about it. And then some bears. I'm still watching Caterpillar.
That is a pretty chart, Tim. That one's hard to ignore.
I am looking at that and a breakdown. I mean, Marky, Cat's weakness is apparent, isn't it? And if you're going to build a bear team, which I think everybody needs to build a bear team, Mark, you need to be ready if the market turns or disrupts, or if this theme continues of sector divide. Caterpillar to me has got some downside there. I'm watching Budweiser, beer sales. And by the way, they do a lot of production all over the world. This is not just a US play. In fact, a European InBev right there. Break below 40. I think you got some downside. Hilton, HLT. Just an ugly chart. Hotels.
Yep. That was on our stock report this week, and it looks like we're getting that confirmation down. So the whole sector looks to me like it's iffy.
Comcast, CMCSA. Still, I mean, their earnings was not great. They have increasing costs. They can't open up all of their, locations and whatnot. I'm looking for some downside there potentially. And then one last one, Burlington Coat Factory, which doesn't hit my watch list all that often.
What's their symbol again?
Burl, B-U-R-L.
B-U-R-L. Not often I get stumped on symbols. It happens.
Some of these retail names on the reopening idea, Mark, they're still showing me some weakness. Marky, what about you? What's on your radar?
Yeah, I'm holding off on anything really until Powell speaks tomorrow morning. I think, once again, when you analyze probability events, something could happen tomorrow morning. I think Powell, Trump, hey, they're all government leaders spending money, so I think Powell could revert to his hawkish true roots, which he has, but he's a coward and has caved into those constantly under pressure. I think he says something that along the lines of, hey, we don't really see negative interest rates. I could see theoretically a little market tantrum. Now, I don't know if that's going to play out right, but the fact that it does and could provide a better opportunity. So I'm holding off on anything new today to wait for Powell to speak tomorrow morning.
Yeah, I mean, I understand that. There's no doubt about it. Most of the stuff I'm watching as well, I probably would wait for confirmation in the morning and whatnot. There's no question. But aren't we already seeing the Fed chatter today? I mean, it's kind of a prelude to Powell's speech tomorrow, don't you think? I mean, they're already talking about how they don't see negative rates and they don't want us to go there and all that kind of stuff, that it's not appropriate. In fact, I don't know if it was Kashkari or who said it, but that it's not the best tool in their toolkit or some phrase like that, Mark, that I read. I bet Powell does say that. And you know what the Bulls are going to say? Well, that's already priced in. We knew he was going to say that anyway. We'll see.
If I had to do something, go ahead, Cody.
I was going to say he said that in the past. So no, we haven't necessarily heard from him this week, because all that's really happening is journalists are pulling old headlines or old phrases that came out of old speeches. Powell in the past has said he does not see negative rates as a good for U.S. policy, and that was back almost a year ago now, when Trump was touting for negative interest rates. Then is when Powell was like, no, we're not going to do it. Just because we haven't seen a recovery or a reopening of the economy as quickly as possible, and this negative possibility starting to resurface, doesn't necessarily mean that's what Powell's going to say. If he does, yeah, that's him becoming more and more of a dove every day versus, yeah, he used to be a hawk. But I don't think that we can speculate as to what he's going to say, because I think, like we were talking about earlier, this is markets trying to tell Powell what they want him to say. So we're hearing a lot of rhetoric about, hey, you should prelude to negative interest rates because that'll, help the market or help the economy. It was like, that doesn't necessarily ring true. So I don't think we've heard from him, and I'm with Mark. Wait until you actually hear what he's going to say and leave the speculation.
Back on the S&P for just 1 second, one last thought. I mean, Mark, I understand the theme and the momentum and all that kind of stuff, but I think it's equally important for people to be ready if this market breaks back down, right?
I don't know what the catalyst. I spend way too much time trying to analyze what the catalyst will be that sends it down.
Mm-hmm.
But I think that's a healthy exercise nonetheless. If you get an actual catalyst, the drop probably can be fast and furious, right? We know that about bear markets. We know that about fear. We know that the bullish side is a lot of smoke and mirrors about, hey, things will be good one day, all of that. So just be cautious and tactical and not overextend, and be happy with making good money. You don't have to go bet it all on red. Just be smart about it. Is something I think it's a good time for our pro members to re-talk about money management. We'll probably do a little bit about that moving forward. I just got to share one last tweet before I can't give it. I don't know who did it. I just cut and paste it, but the tweet was referring to the Federal Reserve. Just go to negative rates and buy stocks already, Federal Reserve, so you can finally become totally irrelevant and out of our lives for good. Like, seriously, just go negative interest rates, buy stocks, so we never have to talk about you anymore, ever again.
You guys are nuts. This is just
At that
starting.
point, they just need to dissolve.
You guys do not underestimate the Fed. They're just starting this. You think that they can't go negative, stay negative, buy equities, manipulate markets for the next 10 years?
That's what the tweet is saying, is like, just go do it today, so we can be done with you.
So what you're saying is we should buy more Bitcoin and gold.
They've already opened Pandora's box here with this fiscal stimulus and Bitcoin, gold, inflationary products, the cool kids on the team and the bets up and down. It's a lot like any market, quite frankly, here, guys. I mean, we have winners, we have losers, we have uptrends, we have consolidations, and we will get those triggers as we move forward. Doji Day on the market here today. Let's call that a wrap. Mark, pitch our pro membership product if you can. How do people get a trial? And what do they get in that?
Listen, you get a ton of video content teaching you how to trade. You get a lot of shows, live shows, helping you navigate current conditions on material that help you today make the best decisions you can. You get reports, you get blog articles, all tied into helping you succeed today. But the best thing is you get to be part of this amazing community. And I'm not talking about Noah or Tim or myself or Cody or Matt or Gino or anyone else. I'm talking about the members themselves, the most entrepreneurial group of individuals that want to change their future, good human beings, great people. And I truly, truly, truly mean that. Thank you so much for the well wishes I received on my daughter on a day that I was really, really nervous. I appreciate that. It's an amazing community. Come be part of it. Sign up for a trial. Go to team@tackletrading.com. Go to the store tab to sign up for that trial. Or you can always email me at team@tackletrading. Be happy to set you up manually. And Tim, you are on mute.
Great job here today, guys. We are out. We'll be back tomorrow, same time, same station.